as we continue here, we've got the 1 hour chart. We've got our position that we took just a little while ago right here. That's the position we took. That position's closed and over. And I went forward in time, and here's what happened. I looked for another gentle, or I hate using that word gentle, that's such a lame word, but a gently sloping trend line, or a gently sloping trend. And I found it by using this point right here, and then using this level right here. And the reason I know that is a gently sloping trend line is because I can compare it to this area right here, this really severe move upwards. And whenever I see a severe move upwards, I start looking for a baseline. Even though that severe move upwards is an indication of, or an early warning sign of something that's moved too far too fast. And then I want to start looking for a reversal. So I'm going to dump these boxes, these lame circle boxes that I drew, and I'm going to put the trend line underneath that. And then I'm going to extend that trend line out further because I'm going to need that baseline as a profit target, and I don't know when the currency pair might return to that baseline. We're starting from the 1 hour chart, so we're going to drop down to the 15-minute chart and see if we can draw a steep line, not a steep line, an entry line, a blue entry line underneath the candles in order to time a reversal or take a trade on a reversal. And boom, there we have it. We've got I think that's a pretty good setup here. We've got an entry line on the 15-minute chart and a baseline on the 1 hour chart. And now we're able to sit back and wait for the candles to go below our entry line. If they do, well, see, I didn't draw my entry line maybe necessarily long enough. So let me extend this out to the future. I drew the entry line based on 2 points in time that you can see here. I based it on the intersection, well, this anchor area right here where the currency pair dropped, and that's the second anchor point or the second reversal point that we based the baseline on. And then just immediately thereafter, it fell again and it dropped. So I drew it based on those 2 points in time there, and now I'm simply waiting for that line to break. There's a close and a break below that line. I'm going to initiate a sell trade, and I got to put the stop loss. So my stop loss is right here. We're going to keep the stop loss right there for now, just like we did before. Stop loss is at 95.76, and then let's just take it 15 pips higher than that to 95.91. Wow, that's the entry that we had on the stop we had on the previous trade. That's kind of interesting. Then we're going to click sell, and now boom, we're in a sell position. And we're going to drop, we're just going to move the candles forward. Now, immediately after we took this trade, the pair moved against us. That's going to happen to us sometimes, and we're going to have to deal with that. As we do more of these examples, there will be times when we're just not happy with the trade because it's moving sideways, and we want to get out of it. Immediate movement against us, though, is to be expected because it's a trend. We're fighting a trend, and there's no guarantee that we're going to be right about this. Expect that initially, right after you take the trade, that there could be some movement against you. In fact, that gives you some forgiveness. You can, if you miss the entry for the trade, later on you can recognize that actually you have an opportunity to get in at a better price later on down the line. So if you didn't get in where we did, you might come to your charts later on in the day after work or whatever, and you might see the candles even higher than they were before, and you have a chance to enter a little bit later. We're just going to keep the trade open, though, because we had a stop loss in place, and we could just let it run. And for now, we're just checking that out. Now we're seeing exactly what I really dislike, which is we moved down initially, but then it just came right back against us. And that's frustrating for a lot of us, right? We want to see some immediate activity in our favor. Right now, we've been in the trade for, let's see, it's now 11:30 p.m. Eastern Time on the 14th, and we entered the trade on the 12th. So it looks like we went through a weekend. We opened on a Friday, and now it's Sunday. So we've been in it for a while, and we're just going to keep the candles moving forward, and boom, it does fall to our baseline. We're right there. This candle closes right at the baseline, and we're going to go ahead and we're going to close the position. you'll notice here that once again, in each of these two examples, we got very close to the baseline, meaning the currency pair knows where that line is. Oftentimes it will try to reverse before it gets there. Other times it will go right to it, smack it, and reverse. But it knows where that line is, and you don't have to be afraid that it doesn't remember where that line is. It wants to get there. It knows how to get there. These are the first two trades. We've had, I think it was about a 51-point gain on the first one and a 68-point gain on the next one. Each trade lasted, well, let's just look on the 1 hour chart. Let's take a look at each of these. One lasted 1, 2, 3, 4, 5, 6, 7 hours approximately, and this one lasted 1, 2, 3, 4, 5, 6, 7, 8, 9, maybe 15 hours, 16 hours, maybe 20 hours at the most. So you can get an idea that trades that you take on the 2 trendy system that are based on the 1 hour chart and drop down to the 15-minute chart, they're going to last,